Hello everyone, and this is the Lima market report for this week. Let's dive in. Starting with last week, we saw headwinds across the US stock markets and mixed signals from the bond market. The S&P declined approximately 2.43% in a week, and the NASDAQ composite fell about 2.5%. The Bloomberg US Aggregate Bond Index posted gains. Yay! 0.33%. With the geopolitical trade, a shifting tone for U.S. towards China helped spark some early optimism. But on October 13th, the markets jumped, and the S&P 500 was up about 1.6% that day. And the NASDAQ was actually up 2.2% after the U.S. gave signals of a less aggressive stance on China trade. But overall, uncertainty remains. Trade tensions, especially around technology, rare earth exports, and China stance continue to cast a shadow. Economic interest rate signals. Well, the Treasury yield drifted lower. The 10-year yields slipped under 4.10% in the week, and the commentary from the bond market suggested that higher for longer interest rates view is the front and center issue here. With equities down and bonds up slightly, the market tone felt cautious. Investors are asking if we may be in a late cycle with stretch valuations. So where do we see opportunities if trade tensions ease further? For example, a constructive meeting agreement with China that could act as a catalyst for risky assets, especially tech and growth-oriented stocks. With yields actually have falling and bond gains for the week, a stable or lower yield environment could support equities and corporate earnings. The rotation towards defensive sectors such as utility and staples that held up better in the prior week might offer attractive entry points here. What are our concerns for the week? The higher for longer outlook for rates remain the risk. If inflation surprises on the upside or the Fed signals fewer rate cuts than expected, risk assets may stumble. Geopolitical flare-ups in the trade in China or elsewhere can still spook markets and lead to safe haven flows into bonds or gold rather than equities. The concentration of gains in a few mega cap tech stocks remain a structural challenge. If those names stall, the broader market may suffer. So to wrap up, the week of October 13 brought a pullback in equities and a modest uptick in bonds as markets digested trade developments and interest rate risk. For this week of October 20th, keep an eye on trade diplomacy, interest rate signals, and whether defensive moves turn into broader opportunities. Obviously, for more detail and models and updates, visit MRAadvisory.com. Thanks for listening in and have a great week.